Hello and welcome to Charting the Markets. With me, Sean Murison, Senior Market Analyst at IG South Africa. On today's economic calendar, we do have that all-important core PCE data. It's month-on-month reading and a primary gauge of inflation for the US Federal Reserve. So we're watching that closely. We do also have that ongoing OPEC meetings, which are lasting all day. So oil prices could experience a bit of volatility. We do want to keep an eye on that as well. Let's start off with the US dollar, the dollar index. Obviously, will be influenced by what we see today with that core PCE data that comes out this afternoon, early afternoon. At the moment, price is in a broad consolidation. We see it's trading below that 200-day simple moving average. So it's range-bound price environment, trading between levels. We had a reversal here, which we highlighted in our last time we spoke. We were looking for extra confirmation with a close above that 103.40 level. It didn't really happen. Instead, the price has fallen, found support at the 102.20 level. Now, we do have a new reversal. I'd say the same principle does apply. We're going to see some momentum to that move. I think these two candles together probably not strong enough, but today's candle, if it does close above that 102.75 mark, then we can start looking towards 103.40 as that initial target from the move. So we are oversold. We are seeing a bit of a rebound from oversold territory, but we're in a range trading environment. So we're trading between the levels. We've got a reversal forming off that lower level of support. We had one earlier that didn't work out too well, but we do have another one at this point in time. So looking for a close above for long entry, targeting move to 103.40, which circumstance probably this is quite a long body candle, maybe halfway down that candle. And that's obviously if it does close the way it is trading right now. But a lot can still happen. So looking at the euro dollar, we have more indications of short-term dollar strength. Euro dollar starting to pull back from overbought territory. We've had this rally up. We have fallen short of what was one of our targets there, that 1.1065, but we have certainly made a good attempt in that direction. We now got a bearish reversal. Just circled that black and a harami type bearish harami, and we are seeing some follow through with today's red candle. So that would suggest some short-term downside and move out of overbought territory towards a level of support, probably initial support 1.088 mark. And you could probably look at where this 200-day simple moving averages, that blue line, 1.0834. Now, if you are trading that short, suggestion is always, maybe looking at the reversal high as a stop loss indication. However, we have moved quite a bit, so maybe below the single-day high. A close above the single-day high might be a consideration if you are looking at shorting that. If you're not comfortable shorting the move lower, then maybe it's worth considering waiting for that weakness to play out and looking to see where the price settles and look for a bullish reversal at one of those lower levels of support or possible long entry. Again, we're also in a range-bound trading environment for the euro dollar, obviously inversely correlated to what we see with the US dollar basket. Now moving over to cable, so sterling versus the US dollar. Again, we have another sign of short-term dollar strength, and this can be derailed. We'll see how that inflation data comes out a little bit later. But at this point in time, we have a bearish reversal off resistance at 1.2745 mark. That reversal suggests a move lower with our next level of support considered at 1.2562. People are trading that, might have a stop loss on a close above that reversal high or the one-day high, depending on your threshold for risk. Not comfortable shorting, and we wait to see where the price settles again and looking for a bullish reversal at one of the lower levels of support for long entry. But we are in overbought territory. We're still quite overbought. So if that is an indication to take note of, and suggest that we could have a little bit of a bigger movement down. Right, moving over to some indices now. Starting off with the Nasdaq 100. Now, Nasdaq 100 chart has been looking positive. So this is one of the indices that we do still consider to be in a longer-term uptrend. Price, there's quite a lot of daylight between the price and that 200-day simple moving average. We did have that very, very quick break, but we do think that momentum that we've seen is enough to consider that longer-term trend still to be up. In the very short term, though, we do have a bit of a consolidation forming, and that's between levels 15,900 and 16,130. The price has settled around what was originally our target from a while ago at 16,000 level, which is cutting through the middle of that range. So the longer term trend being up suggests keeping a long bias to trades. We are, however, trading around overbought territory. So for me, my preference is to see a bit of a downside break for this range, a bit of a correction in the Nasdaq, and then looking to buy close to one of the levels of support. Would not be looking to short in lieu of that longer term uptrend. Another, probably a higher risk consideration for long entry would be if the price was to break up out of this range to the upside and close above that 16,130 mark. In which case, you might consider having a stop loss on the close below that 16,000 mark while you start targeting what is a historical levels there. So we've just lost it there. But you could also just project the height of this range. But again, preference is to see a bit of a pullback, sort of that consolidation break, a bit of a pullback. We see the price settle at one of the lower levels of support before long entry because we are quite overbought at this point in time on major indices such as the Nasdaq, but still respecting that longer term uptrend bias. Now the S&P 500, as you can imagine, similar looking picture, but not quite the same. I'd say that range is a lot narrower that we see. I haven't actually labeled it there, but you could argue it's somewhere between about 4,570, the low at about 4,530 odd, a very, very short-term range. Now, again, quite overbought at this point in time. I think there is a bit of a bias to the upside at this point in time. So we do still have that target 4,630 in play. But for me personally, I'd like to see a bit of a pullback towards the lower level of support, possibly that 4,460 mark. A nice sort of a healthier correction from that overbought conditions. They'd be looking to buy at that lower level. And that would be the first level that I'd start considering, that about 4,460. Now, DAX 40, the Germany 40 momentum has been quite strong on the upside. We do consider this to be in a range-bound trading environment. So we are trading between the levels, but we have had a break of this 15,990 level that is targeting a move to 16,330. Favoring a bit of that euro weakness we are seeing at this point in time. Long-bodied candle, I think if you have managed to catch this lovely move higher at this point in time, you would be thinking about tightening your stop or trailing your stop loss. That is quite a long-bodied candle, so I think having that close below that might be a little bit too far, considering you're not expecting too much further in terms of gains relative to, well, the next level of resistance. So maybe having a stop loss on the halfway, the midpoint of that long-bodied candle, somewhere at about 16,100 might be a consideration if you're targeting that 16,330 level. If we get through that, the 16,530 does become a further target. But we are looking quite overbought, and so if we do have a bit of a reversal close towards that, that might open up a new short entry. But for now, the long trade is the one that's in play, 16,330 being that target. Trailing stop loss might be a consideration for those looking to lock in a bit of profit and reduce their downside risk for that move. Now, FTSE 100 been a bit more frustrating if we look at that, just grinding around that 7,410 mark. We've been looking at some, trading between the levels has worked out quite nicely over the last little bit. At the moment now, they've seen a bit of a stagnation there. We are getting a bit of a finding support at that 7,410 mark. It is showing to be a relevant level at this point in time. The way the candle pattern stands is we do have a bit of this bullish engulfing type pattern, suggesting a move higher. I think by now we can start looking at much more conservative targets because of how it's been fumbling around it. Because I think there's a shorter term range here now with that high sitting somewhere between 7,520 and possibly 7,535. So short-term range trade could be forming. Want to see a positive close here, targeting 7,515 to 7,535. And looking at a close below 7,410, possible stop loss indication for that. Right, moving over to some commodities now. As we mentioned earlier, we do have Brent crude, which is reacting, anticipating the ongoing OPEC plus meetings. We are expecting some extensions to production cuts there, and really is getting quite a bit of momentum to the upside. We do have a bit of this inverse head and shoulders type formation here. This I'm just marking with my mouse pointer, and that's showing a bit of a reversal as a function of this recent move down. This close above, we'll call about 82.60 would be that confirmation of the upside breakout. 84.50 would have been that initial target, but we are already trading there. So trading that pattern, if you missed out the first time, maybe you want to see a bit of a pullback from that back towards about that 82.44 mark, maybe even down to say about 82.40 as a possible long entry, and then targeting 84.50. Sometimes you don't get those pullbacks though. If you are trading with the current momentum, I think to unlock further gains, you want to see that price trading above 84.50, in which case you can start looking at 87 dollars a barrel as the next upside target. And then looking at trailing that stop loss below a 1 or 2 day low. I think these candles are quite big and these movements have been quite big. So maybe a 1 day low might be a consideration. Or even if you have a big bodied candle like that, maybe it's somewhere in the middle of that candle. Some of these candles are a couple of percent in size. Like today's candle already 1.5% move up. So short-term momentum is up. We are into overbought territory, but early into overbought territory. I wouldn't worry about that too much. Do want to watch what's happening with that OPEC meeting right now. All right, gold. Now, gold has had a very good run. Last little bullish reversal, bullish move off 1970 as we got very, very nicely. It's crashed through that 1,000. Well, crash is the wrong term because the movement has been to the upside, but through the 1990 target, through the 2010 target, and settling at that longer term target we had there of $2,045 per ounce. Now the price is stopping, it is consolidating. This candle here is a doji candle showing a bit of indecision at this level, and we are looking overbought at this point in time. But we don't have a reversal just yet. As we look at this next candle, it's a small bodied red candle. I think if you're looking for a bearish reversal, so I do still think this is an arranged trading environment, then you want to see a bit more of a depth on that red candle, a stronger close, maybe halfway below that preceding candle. So we've erased more than half of those gains, suggesting that we'd have that further pullback. That is my preference in terms of how I would like to trade that, is for that reversal to form, for the price to pull back, and then look for long entry. And certainly at the closest level I'd be looking for long entry, which might be that 2010 mark. Still want to see the price move there, show that pullback has ended and just started to tick back. If you're looking at a line graph even. But certainly one of those levels. If you were looking at shorting a move low, if we do get that reversal, then having a close above that 2040 level might be a consideration as a stop loss indication. Now, the other side of this is that we could actually get a break, an upside break of that 2045 mark. We do see the price closing above that. Then we start looking at this previous high there, 2081, as a possible longer term upside target. And the way the gold's been moving, it probably won't take that long, I suppose. There is a bit of momentum there. So preference here is to wait for a pullback from the high, to look for long entry, provided that pullback ends and just ticks back. Price just ticks back at one of those lower levels. Alternatively, higher risk type trade setup would be a close above that 2045 mark, upside breakout, in which case we start targeting 2080, that previous high. Right, last but not least, we have platinum. Now, platinum, range-bound trading environment. It's really hovering around that $940 per ounce mark at this point in time. It's testing that level there. We actually had a bit of a breakout, but since then, the price has moved, started to continue to consolidate. So if you're looking at long entry, then maybe looking for a close above at least the upside of that body, maybe 945. We did have that breakup, but it hasn't really shown any momentum. We want to see a bit more momentum to that move higher. Alternatively, you're looking for the short entry, a move back to 875. Then you want to just see a bit of a stronger close and possibly a close below that 925 mark, just to show there's some momentum on the downside. But we are in a bit of a short-term consolidation around that 940. And so maybe the way to do it is just to take and draw a little rectangle just around that, and just to mark those levels and wait for that breakout to occur before committing. I think that range might be a little bit too narrow for a very short-term trade. All right, that's all the charts from me. I'm Sean Murison, a senior market analyst at IG South Africa, and thank you very much for watching.